Everyone is talking about buying of a property, a house or any such property, maybe for the purpose of using it or for the purpose of letting it out or waiting for the development to take place and sell it as an investment. Now, what silently happens behind the taxability of that and how does income tax step into every transaction that will take place, we'll deal in this episode. Welcome back to Tax Talk by TNC Sridhar. I am TNC Sridhar here. We simply help you to sort out your financial difficulties in this case of sale and purchase of immovable properties. In the previous episode, we talked about the gold. What happens when you buy, exchange or sell gold? Similarly, we'll deal with the topic of immovable property as to what happens when you buy, you sell, or you rent out, or you enter into a JV, joint venture. All those aspects will be dealt with in this episode. When you go to buy a property, you are required to pay a registration charges and the stamp duty. These are the payments which are incidental to the transfer. Now, even though the cost of the property will be mentioned in the agreement, the registration cost and stamp duty will be mentioned at the time of registration. These have to be added to the cost of the flat, cost of the property that you have purchased, which will be of use to you at the time of selling the property. Another thing you have to remember well is that whatever payments have been made for the purchase of the property is out of a disclosed source of income. So that if it is not disclosed properly, then it will be liable as unexplained source of income and that amount will also liable to be charged. For example, you are purchasing a property of 1 crore and you are purchasing the property by making a down payment of 20 lakhs and 80 lakhs as loan. Loan will be explained, but the 20 lakhs if you are not able to explain out of the known sources of income, then you will be liable once again for the tax of the 20 lakhs. So you have to be very careful while working out your finances at the time of buying a property. The buyer has to ensure if the transaction is more than 50 lakhs, as per the provisions of law, he is required to make the payment to the seller only to the extent of 99%. That 1% has to be deducted at tax and paid to the government treasury, and that payment receipt will have to pass on to the seller. So the seller receive 1 crore, he will be receiving 99 lakhs and then he will be receiving 1 lakh as TDS certificate. This is to be ensured. When you buy a property by taking a loan, in that case, you have to remember that the repayment of loan is to be taken into consideration. The repayment consists of two elements. One is the repayment of principal part of the loan and second is interest part of the loan. The principal part of the loan which is repaid is given as a deduction to the extent that is permissible under 80C of the Income Tax Act. While the interest that you pay on the borrowed capital is permitted to be deducted from your income under section 24B to the extent permissible limit of 2 lakhs as on date. Many people are in rental houses. So as far as the owner is concerned who has bought the property for renting purposes. Now whatever he receives, that is his income. That is taxable under the Income Tax Act under the head income from house property. Now while taxing, there are some deductions that are allowable under the Income Tax Act, like municipal taxes can be reduced and 30% for the repairs and maintenance, whatever are paid to that extent is allowable, whether you spend or not, it's a standard thing that is allowable and a few things are there. So these are the benefits that one has to take for while giving the property on rent. So in respect of properties which are let out, There could be situations where the property is ready for let off, but there are no tenants. In that case, property remains vacant. So, in that case, you will not be getting any income. But all the same, you will be entitled for the municipal taxes you have paid and that 30% of repair and maintenance, whatever that will be entitled for as and when you receive the money. But there could be situation also where you are not letting out the property, you are occupying it yourself. So in that case, it is called as self-occupied property. In that case, your receipt is nil. So it is taken as nil. The net effect is that when you take it as nil, against that also you will be entitled to take deduction of municipal taxes and the interest that you pay for the borrowed loan. So in net effect, when it will happen, it will be a negative income. So there are provisions under the Income Tax Act where this negative income can be adjusted against positive income on other heads. It's possible. So you can take advantage of that also. Now coming to the selling of property. Whenever you sell the property, you may be required to undergo some expenses, maybe brokerage. Because you may not find a buyer in the market directly. You may be required to engage some broker. So whatever brokerage you pay, similar to even while buying off, if you are engaging a broker, whatever brokerage you pay, you will be entitled to set it off against the, in case of selling, you will be entitled to set it off against your income. While buying, you can add that cost to your base cost so that when you subsequently sell the property, you can get benefit of it. But very important aspect is that the evidences have to be there. If you just paid cash to somebody not recorded anywhere, you will not get benefit of brokerage. That's very important. So now, while selling the property, the two things are required. One, the property when it was purchased becomes relevant. If the property is very old or it has been got in your heritage, you have received this through your grandfather, father and etc. like that. If the property is beyond 2001, in that case, the base cost is taken as the value of the property as on 2001 and indexation is done accordingly, and then you will be entitled for indexation benefit. Only the difference will be charged to capital gain under the long-term capital gain. But if you are selling the property within a short time, then it will be subject to short-term capital gain. Over and above this, when you sell a property and when you get the money, you can still escape from the payment of tax. That is, when you will invest this money again into the properties. That is, either you can buy a property or you can construct a property. If you are buying a property or constructing a property 1 year before this sale or within 2 years in respect of purchase or 3 years in respect of construction, if these things are completed within this period, then the entire amount that has been spent on that new property will not be subject to tax under the head capital gain. Now the trend is that when old properties are there, they are being demolished and new properties are built on that. So there could be a situation that in big cities where small buildings were there, ground floor 1 floor, ground floor 2 floor there. On that, if somebody wants to build a multi-story building, bring more units into building, then what happens is that there is a joint venture entered between the landlord and the builder. So the builder enters into a joint venture agreement by virtue of which he says that whatever property you surrender, correspondingly some property will be given to you free of cost in the newly constructed building. And there could be situations where some additional property may be required to be bought. For example, suppose you have surrendered a property of 400 square feet land property and the water you are going to get is some 1500, then 400 will be given free. For the balance you will be required to pay some money, some concession rate money will be there. That will be all you add up into the cost of it. Okay. Then there are also situations where during the period, the gestation period they call it, that is when this building is demolished and another building is brings into being. During this period, you are required to stay somewhere else. So the builder may give you rent for that period. So when rent is given, how that is to be taxed. These are the aspects which will depend upon the facts and circumstances of the case. But by and large, when a compensation is given for the hardship, it will not be subject to tax. Now, let's understand this basic. Government is not interested in taking a single paise more than what you are due to pay. At the same time, it is not interested in sparing a single paise that is due from you. So, whatever you can, as per proper planning, you can avoid payment of taxes. For example, when you get more money while selling a property, first I told you about investing in new properties. There are also provisions. When you invest on certain bonds for a certain period, then that particular amount will not be taxed. Now, another very important thing that one has to remember is that when you sell a property and when you get that money, you will have to deposit in the bank in the capital gain account. So that when you purchase a new property or when you build a new property where money has to be paid, the money can be drawn from that account. The banker will release that money from that account depending upon the certificate of requirement submitted to the bank, so that that money is not used for any other purpose. But if you take that money and put it in a simple fixed deposit and then keep it, it may become liable to tax because you have not followed the conditions laid down for enjoying of the exemption. So you have to be very careful that within 6 months of the closure of the year, these amounts have to be deposited in the bank in the capital gain account. Then only you will get this benefit. This benefit will not be given if you deposit in normal account and then go ahead with that. Sometimes it may so happen, you may be working on a transaction, it may get delayed. But there again, the moment you find that this is transaction going to delay beyond certain limit, then immediately you have to move it to the capital gain account so as to enjoy the benefit of exemption and also avoid from the hardship of getting taxed for the technical default that you have committed. These provisions which are taken are generally in nature. But there could be some practical difficulties and practical situations that you come across. Then in that case, you can contact me on the comment box and let me know so that I can give you proper advice accordingly. Now, with a view to get any further clarification on this regard, you may like, share and subscribe to this channel and make your request on the comment box so that appropriate advice can be given.